Since Palantir's direct public offering just a few months ago, the stock price has been a roller coaster, going from over 3 times its initial price and now settling to about 2 times its initial price. It seems like investors are having some trouble figuring out how much Palantir is actually worth, which is understandable since it's a pretty complex business with less than certain financials. I'll try to shine some light on this roller coaster of a stock and let you know whether the real fun is already over or if the ride is just beginning. First, let's take a look at Palantir's business and the 3 products they offer. Palantir is an enterprise software as a service company that brings value to its customers by offering central operating systems that organize and process big data. Being an enterprise software company, Palantir has a few customers that pay millions of dollars for the software they offer. Palantir's first product is called Gotham. Gotham allows huge amounts of data from military and government operations to be seamlessly integrated into a usable operating system. This system connects data from various sources to find trends and run analyses using different assumptions that the user can choose from. Basically, it connects all aspects of military operations and helps leaders decide what to do and tells others how to do it. Foundry is Palantir's commercial big data operating system. Using data that customers input, Foundry creates a virtual recreation of the customer's entire organization, called an ontology. Using an ontology and machine learning, Foundry allows customers to find optimal amounts of inputs for their organization and test the impact of changes for the entire organization. It connects the entire institution together and allows different users to send requests and make decisions for other parts of the organization. Apollo is Palantir's third product, except it's not really a product. Gotham and Foundry mainly use cloud computing for their operations, and Apollo makes these products usable and secure almost anywhere in the world. It acts as the infrastructure that connects the software to whatever cloud the users need to use. For instance, the U.S. military uses its own secure database systems, and Apollo allows Gotham to operate on any cloud service they use and receive real-time updates around the world. Now we'll take a look at some of the numbers Palantir has made public in its short existence as a public company. Palantir has yet to become profitable, which is due to high reinvestments and the long-term vision for the company. Palantir recorded revenues of $1.1 billion in 2020. Which is a 47% increase from the year before. There are 139 customers, and revenues are basically split equally between government and commercial customers. In 2020, the average revenue per customer was $7.9 million, which increased 41% from $5.6 million in 2019. Palantir's gross margins are extremely high, and operating and net margins will likely improve over time as the company becomes profitable. It's also important to consider Palantir's economic moat and management team. Since the beginning, the company has worked to solve complex problems that the private industry wasn't paying attention to. As a result, Palantir has created a valuable and unique product that competition cannot match. In this way, Palantir operates an efficient scale moat. In the military space, Palantir is soon to become the only company ever granted the rights to develop software for classified Level 6 data for the U.S. military. Other companies have software that organizes data and perhaps even offers some optimization solutions, but no company offers the extensive operating systems that Palantir offers for commercial and especially military spaces. So, Palantir dominates the military market for the US and its allies, and even dominates entire industries in the commercial space. For instance, Palantir dominates the commercial air travel industry with its Skywise system, which is used by Airbus and over 100 airlines around the world. As a result, Palantir operates almost like a monopoly, with no direct competition for its core products. In fact, Palantir's main competition is the customers, since some could theoretically build a product to use for themselves. However, developing a new system would lead to extremely high switching costs for the commercial industry and would not be worth the investment for many commercial organizations. The U.S. military is also unlikely to switch from Palantir. The U.S. actually has a law that forces the government to choose a private product on the market before developing its own product. So as long as Palantir exists and continues to be the superior product, the U.S. government is extremely unlikely to leave. Palantir's management team is definitely something to brag about. If you know anything about Peter Thiel, you may have noticed that Palantir sounds exactly like the type of company he describes in his book, 0 to 1. Peter Thiel is one of the co-founders, along with CEO Alex Karp and President Stephen Cohen. Peter Thiel started Palantir in 2003, recruited Cohen to build the prototype, and later asked Karp to become CEO in 2004. Since then, the company has been reluctant to go public. Now that Palantir is public, shareholders don't exactly make the decisions. Palantir has Class A, Class B, and Class F shares. Class A shares have 1 vote per share, Class B have 10, and Class F have as many votes as it takes for the founders to have 49.999% of the total vote. Yep, you heard that right. As long as the founders hold a minimum number of shares, they will likely control a majority of the company if they have both Class F and Class B shares. Unfortunately, Palantir hasn't released its proxy statement yet, so it's unknown exactly how much the executive team is compensated and how much ownership the founders have in the company. However, Karp and Thiel likely have over $1 billion worth of Palantir stock, and Cohen likely has close to that amount. Karp has said that executives and employees are heavily compensated in stock options, but the exact amount is unknown. One red flag is that Palantir's chief operating officer is reportedly compensated over $26 million per year, which is far above what other COOs make in the industry. However, Palantir is very generous with stock options for its main employees, which incentivizes them to carry out Palantir's long-term vision. Currently, the total market for government and commercial big data processing systems is about $120 billion. By the end of the decade, this market is expected to exceed $600 billion, or an annualized growth rate of over 17%. High growth is expected because more governments and commercial organizations will need software that connects and projects their data in meaningful ways to all users. Palantir will inevitably grow with the market in the next 10 years. It will also increase the revenue per customer by scaling the services that customers already have. Some customers, like the US government and its allies, use Palantir's products but have not universally accepted Palantir softwares in most departments. So, Palantir will likely generate significant growth in this area. Given that Palantir and its founders are focused on the long-term prospects of the business, it's fair to consider some of the growth projections the company gives. The company projects at least 30% revenue growth for the next few years, and at least $4 billion in revenues by 2025. This would make sense since Palantir will have the opportunity to acquire many more customers and increase the revenue per customer. Further, after 5 years, we can expect Palantir's growth to be less than 30%, but still high as the market grows and customer acquisitions and revenue per customer increases. All things considered, I have projected a revenue growth rate of between 40 and 30% for the next 5 years and 28 to 20% for the last 5 years. Now it's time to figure out Palantir's intrinsic value and whether or not it's a buy at these prices. Over half of Palantir's revenues are from the United States, and the rest are from parts of Europe and Asia. So, I've considered the equity risk premiums of each region today and calculated a weighted discount rate of 6.5%. I've assumed that Palantir's operating margins will gradually increase to 38%, which is slightly higher than most SaaS companies. But Palantir is nearly a monopoly and will likely continue to be one in the future. I've also assumed reinvestment of about half of revenues in the beginning and then decreasing to 12% of revenues in the end. Using these assumptions and growth rates, we get an intrinsic value of Palantir's stock of about $35 billion or $19.36 per share. This price is slightly lower than Palantir's current stock price of about $22 per share. Of course, Palantir could grow beyond these growth rates, by acquiring more customers and boosting the revenue per customer. But it's also possible that Palantir could fail to meet these growth figures. As of now, Palantir only has 139 customers, and 20 customers represent 2/3 of the total revenue. So, there is a risk that by losing some of these customers, like the government when contracts are renegotiated, Palantir could suffer financially. Further, Palantir only works with organizations that value quote-unquote Western ideas of liberty. So, no for some governments. There's also a small chance that Palantir fails to ever become profitable. So anyways, at current prices, I'm not buying Palantir stock. But if it keeps acting like a roller coaster in the short term, I probably will be buying soon when it's down. Regardless of what I'm doing, I invite you to make your own assumptions and consider the risks and rewards of an investment in Palantir for your portfolio.